You always want to see the right side of the double bottom base undercut the left side. What that does is it shakes out the rest of the weak sellers. These types of double bottoms always have a higher success pattern. So if you don't see that right side low, undercut the left side low, definitely be weary. So we broke out of that double bottom. We trended nicely upwards, riding above the 8-day EMA, showing that there's some strong momentum behind this move. And then if you overlay the other data, which shows the earnings, you can see earnings came out over here. We have a really strong power earnings gap on some absolute monster volume. And then price just kind of tightened above the 8-day EMA, never closed below it. We got in right over here on this move off of the 8-day EMA, and then we finally pushed out of this consolidation on Thursday and Friday. So if you dig into the fundamentals of this company, you could see that it is from a 39 industry ranking out of 197. So it's a top 40 industry. Not every single stock that we trade is going to be a top 10 or 20 industry. The general rule that I like to use is stocks that are in the top 40 industries. Every now and then I'll trade a stock outside of those top 40 industries, but it has to have absolutely top-notch fundamentals in order for it to be on my focus list, then to be traded. So if you look over here at the earnings, you can see that we have 5 consecutive quarters of accelerating earnings: 5, 40, 210, 223, and 490. The last 3 quarters were triple digit, huge numbers that they put out. With the sales, we have 1, 2, 3, 4, 5, 6, 7. We have 7 quarters of double-digit accelerating earnings. And then if you look over here at the number of funds, these are the number of institutions, hedge funds, banks, financial institutions that are invested in the company. You can see from quarter to quarter, they're growing 349 to 353 to 385 to 419. At the end of the day, the institutions are the ones that move price in stocks. So it's our job to figure out what these institutions are doing, and we do that by analyzing volume and price action. That's got a nice 25% return on equity. General rule, I always want to see a return on equity of usually above 20%. We have a strong sponsorship rating of B. We got a top-notch 99 composite rating. We have an A accumulation distribution rating. And the stocks just got absolutely top-notch fundamentals. I definitely think this is a potential for a true market leader in the next bull market whenever that kicks off. Not sure if we are there yet, but I will get into that in our market report video. The next one that I'm going to get into is ARRY. I actually posted this stock a couple of days ago. But let's just take a look at it real quick. So sorry guys, as I have to adjust these charts so that you can see everything good on your screen. So we have a really nice cupwood handle base forming. This is a stage 1 base. And what I really liked about this, as price was kind of coming up the right side of the base, we have this really nice power earnings gap up that pushed through all of the key moving averages, the 50, the 21, the 8-day EMA. And then we tighten above the 8-day EMA. We don't get one close below it, showing that there's some strong momentum behind the move. And then you can see over here, you can see that as price consolidates within the handle, you can see that the volume really dries up. And then it starts to move back up the right side. Over here, you can see the volume pick up, and that's kind of textbook what you want to see. You want to see volume dry up near the low of the handle, and then as it pushes back up the right side, you want to see that volume start to pick up. And then again, you can see the detailed explanation over here that once we get this power earnings gap up, that we stay above the low of that candle throughout this entire tightening and consolidation. Um, it never goes below it. So that's just showing that the buyers are really in control over here. The stock has 3 consecutive quarters of accelerating EPS. It is from solar energy, which is the #2 industry ranking right now out of 197 industries. You have 3 consecutive quarters of accelerating sales. The last 2 were triple digit. You got the EPS for buys upwards to 185% for 2023, 99 comp rating, A accumulation distribution rating, B sponsorship. So this company really has some strong fundamentals to back the technical action up. We just moved out of this base last week. So what I'll be looking for is the EMA crossback. That's after a breakout out of a consolidation or out of a base. That's when price kind of pulls back into the 8-day EMA moving average. You'll see that a lot of the times. You'll see that initial breakout. You'll see the pullback to the 8-day EMA, and then it'll continue to take off and grind upwards. ENPH. This is another solar stock that's also on my radar. We started a position in this stock on Friday on the move off of this 8-day EMA over here. We placed the stop right below. We did get in a little bit early before the breakout. We've had a lot of kind of false breakouts in this stock, but the price action is definitely productive, and I do like this tightening action. And a lot of the times you'll see kind of like a final pullback to the 8-day EMA before price breaks out of the base, and then it just kind of takes off. You'll see that final touchback to the 8-day, and then it just blasts off, and you see that volume start to come in. So let's see if we can push out of this base, get some volume coming into it. If you pull it up on MarketSmith, you see that the company definitely has some top-notch fundamentals. It's got a massive 74% return on equity last quarter. You can see that the number of funds invested are growing quarter to quarter, from 1741 to 2,124 last quarter in September. We have 3 quarters of accelerating EPS. We have 3 quarters of accelerating sales. And then prior to that, you have all double and triple digit sales in EPS, B sponsorship, 99 composite. You got a B minus accumulation distribution rating, A SMR rating, 43 billion market cap, being that the company is highly liquid. That's always what you want to see in the next potential winners, the next potential leaders. You want to see that high liquidity, because the institutions need to be able to park big money and build large positions in these companies, in the hundreds of millions and in the billions. So if a company has a small market cap of maybe 1 or 2 billion, these companies are going to look elsewhere. These institutions are going to look elsewhere to, park their money and build large positions in these companies, because they just don't have the market cap for the size of these institutions. Okay. So next up on the list, we have RELL. So RELL, I really like how the stock has been acting. So you can see we kind of have these really tight price action over here. We basically have 4 days of really tight closes. Then we have this power earnings gap over here. Price gaps up like a nice 24% move on some absolute monster volume. And then you get that EMA crossback. That's what that is here. So after a breakout, it could be a power earnings gap up too. You get that pullback to the 8-day EMA, find support, and then you continue to move higher. Then we built this nice base over here. And what I really liked about it is you can see that as price moved up the right side of this base, you can see the volume the buying volume really starting to pick up, showing that there's some real institutional appetite for the stock. Then we broke out on really nice volume. I believe 188% times the daily average volume. Um, Unfortunately, we didn't buy into this, so we already had a good amount of exposure. We had bought ENPH, and I don't like to buy 3% past the breakout pivot. That keeps you from chasing stocks and getting what they call FOMO. So we don't want to chase stocks. We don't want to buy 3% past the entry. If say the stock was only up 2.5%, but it moved really quickly, it moved I think 5% on one 15-minute candle. So it went really quick, but let's definitely keep this on our radar. Let's watch for that EMA crossback, that tightening and pull back to the 8-day EMA to build a position in that stock. Take a quick look at the fundamentals of that also. It doesn't necessarily have the strongest fundamentals that I look for in a next true market leader, because that's what we're trying to do right now. We're trying to find the leaders of the next bull market, the stocks that are going to run 100, 200, 300%, so we can build some nice large positions and really capitalize and increase our P&L. The company's got 8 digits, 8 consecutive quarters of triple-digit EPS. It's got 7 consecutive quarters of double-digit sales. You can see the number of funds invested are growing quarter to quarter. 14% return on equity, B sponsorship, 90 composite rating. It's got a really strong A+ accumulation distribution rating, showing price and volume signatures that the stock is under heavy accumulation at the time. So it's definitely good stuff and what you want to see. A negative, it's the 186 industry ranking, so it's definitely a laggard in that aspect. But I really love the price action of the stock and how it's been acting. So we're definitely going to continue to monitor this one. Next on the list is GFS, Global Foundries. So we had this really nice base forming, and then you can see some, major heavy accumulation on this move over here. And then price broke out of this, you could almost call it a handle over here on a power earnings gap up. It wasn't really a power earnings gap up. It was just a strong earnings move. You got this really nice big hammer candle forming, some nice volume coming into it. And then since then, price has just rode the 8D AMA, and it's getting really tight over here. You can see the volume really drying up. So I always like these kind of plays over here where you're getting really tight price action. The 8-day EMA is right below. So if we take a position in here, we're using very little risk for the position. If we place a stop right below the 8-day EMA, so even if we get stopped down on the position, it's not that big of a deal. Next up on the list is PI. This is another stock that we took a position in last in. So we had this very strong power earnings gap up on some absolute monster volume. You got price consolidating and tightening over here. You got price putting in 2 different higher lows, one over here, one over here. Price broke out last week. We got an inside candle over here, so hopefully price could finally take off next week. We did have a tight stop on the position, so if we do get stopped out, not that big of a deal. It's part of the game, but the price action has definitely continued to be productive, and let's see where it goes next week. Next up on the list is AEHR. This stock has just been an absolute monster. I really wanted to buy the stock in here when we got that support at the 21-day EMA a couple of weeks ago, but the market was really weak at that time. So you never really want to put on trades when the overall market is in a horrible position, because you're just stacking the odds against yourself at that point. You want to have as much market favorability in your corner as much as possible. So if the overall market is just in a weak position and in a precarious place, it's better to just sit on the sidelines. And that's something that we've done a lot for the last 10 months. We stayed very disciplined. We've been very patient. And because of that, we haven't really lost money throughout this bear market, when most traders are down 30, 40, 50, 60. Yeah, there's some traders that are down a lot more because they keep fighting against the current of the current bear market. And many traders haven't traded through a bear market, and this is the first long duration bear market that we've had in since 2008. So I don't fight against the tide. um, I know when to put my foot on the pedal, and I'm finally beginning to see the market turn around a little bit, and finally beginning to gain some traction on the positions that we have. Uh, the easiest way um, to determine what to do in trading is basically, if you're getting traction on the positions that you're in and the positions that you have are working, then you can increase your exposure. But if you're continuing to get stopped out and stopped out and stopped out of positions, that should be a big warning to take your foot off the pedal, and stay on the sidelines for a little bit until the market conditions are more favorable, and the odds are in your favor. Let's take a quick look at AEHR on MarketSmith. See, this is another 70 company. A lot of people have been talking about this stock. And I think we might have we got a new all-time closing high last week. We broke out of this stage 2 base a couple of weeks ago, and the company's got really strong fundamentals. Got 1, 2, 3, 4, 5 consecutive quarters of triple-digit EPS. You got 6 consecutive quarters of triple-digit sales. It's definitely a smaller cap company, only 736 million market cap, 111 industry ranking out of 197. But I really like how this stock has been trading. I like that even though it had this big pullback in the bear market, it pulled back almost 75%. We have a new weekly closing all-time high last week. So there's definitely something going on here with this stock. So these are my top stocks report for next week. Hope everybody enjoyed the video. And let's do what we got to do next week. Let's keep our watch list and our focus list up to date. Let's make sure that we have stop losses on all the positions that we have. If you got profit on positions, make sure to move up your stop loss to a good place. And let's hope that we crank it up a little bit and this rally continues. I'm going to do a market report video next. And if you're new, if you have any questions, I always have an open line of communication. You can reach out to me via DM on Twitter. You can reach out to me on my cell phone. And I will see you guys tomorrow morning, bright and early. Have a good night.